All right, I think that we are ready to go now. So, welcome everybody. Thank you for coming to this series of the Walker Group event. In this occasion, we wanted to cover some of the aspects of Latin America market regarding the fintech situation, what is currently happening, how founders, CEOs, and co-founders are um, seeing this market, this growing market, how regulation, compliance, paytech, how everything related with fintech is happening in Latin America. So we have three excellent speakers. We have Antonio Pelaez, Javier Buitrago, Antonio from Mexico, Javier from Panama. Both have skin in the game. They have been living and experiencing everything in Latin America within the fintech ecosystem. So, welcome everybody again. And please, Antonio and Javier, can you introduce yourself?
Antonio, you want to go first?
Yeah, gracias, Javier. Thank you. Hi, everybody. Antonio, I'm CEO, a co-founder of DAP. DAP is a company that started 7 years ago, focusing on QR payments in interoperating different QRs in Mexico. And yeah, with a lot of things, new things to do and a lot of changes, but that's how we started. And that's what we've been tackling since the beginning. So nice to meet you, everybody.
Thank you.
Thank you, Antonio, and thank you, Jonathan, and the FinTech community for these spaces. I think that there is a lot happening, so it's fantastic to have these places to think how it's evolving and how we can continue creating value for the market. My name is Javier Buitrago. I have been in payments and fintechs for more than 20 years in Latin America, working all over Latin America, even abroad. And I have launched two neobanks, digital wallets here, one in Argentina, one in Panama, and we launch also the FinTech Association here in Panama, and we are very focused on developing all things covering financial inclusion in Latin America. So it's going to be a pleasure to think about these subjects as a group, as a community. So thanks a lot for the invitation.
Absolutely. Absolutely. Thank you, Javier, for coming. So I think that we are waiting for Juan Pablo Londoño, who is from Colombia. It looks like he's having some troubles to join the meeting. But in the meantime, I think that we can start. So let's start with Antonio. Antonio, let's start with what still surprises many. Why does cash remain so dominant in Mexico despite the growth of digital payments?
Yeah, cash is still big in Mexico. Actually, when we started in 2017, we were cash haters. We were like, everybody says, hey, what are you doing? No, we do QR payments. And what do you think about cash? No, forget about cash. Cash is gonna disappear. We don't like cash. So we start focusing on digital payments, and we hated cash. But then we continue hearing cash, and a lot of people needed cash. A lot of people still using cash, and the merchant says, okay, I need also to receive cash payments. And we were like, no, we gotta be no cash. We started seeing United States and other places that says that we don't receive cash, only cards. And we were like, yeah, that's what the world needs to go. But no, in Mexico, there's a lot of cash, and people like cash, and it's gonna be like this. So just to put you in a little bit of context, there's different studies, but nearly 50% of Mexicans have a bank account, 50 don't. But from those 50% that do have a bank account, I would think that 50% from all those 50%, they don't use their card. They just receive the payment in their bank account, and they immediately go to an ATM, take out the money, give money to her wife, to her kid, to her vendors, to her everybody in their circle, and they still use cash. Either way, they have a card. So, and we also seen that there's a lot of neobanks, digital wallets coming, and it's growing. The people that it's receiving their digital bank account, it's growing. But once they have a bank account, they see that their friends and that their circle, they don't have the bank account. So they can only interact with people with bank account with those new digital bank accounts. They can make transfers, they can make payments, but when they need to pay a friend or family or somebody, is they don't have a bank account. So they need also cash, or if a client of them wants to pay them, that client doesn't have a bank account. So they need to receive cash payments. So that's why there's a big opportunity. So instead of fighting against cash and trying to change the world in Mexico about cash, what is happening is that we are adapting and we're seeing how cash could be a friend, how we can do things with cash. And first, we need to be friends of cash, digitize cash, and later on, we can see if we can disappear cash. But right now, we have to work with it and do whatever we can. Just to put you a quick example, in Mexico, nearly between 10 and 50% of all the e-commerce payments in Mexico are made with cash. What does that mean? Because in Mexico and Latin America, we're a bit familiar with that. But in the United States, hey, how do you pay cash in e-commerce? It's you go to our website and I said, I wanna buy some shoes, but I don't have a bank account. I don't have a credit card, and I don't have right now BNPL is growing a little bit more, but I don't have a way to pay. So what do? So you select you're gonna pay with cash. They give you a barcode. So you go with that barcode to a Walmart and said, I want to pay this. So you don't buy nothing in Walmart. You just say, I want to pay this product that you have registered here. So the Walmart guy scans it and says, okay, yeah, you're buying some shoes in e-commerce. Yeah, pay it. You pay with cash. Once the cashier receives the money, Walmart or the supermarket that is connected to the e-commerce, to the platform, tells the e-commerce, says, hey, I just received the cash payment for your purchase, send the product. So, and that's happening a lot. It started in 2016, 17 with Oxxo. Oxxo is a big convenience store in Mexico. They have nearly 20,000 merchants. And they started doing Oxxo Pay, that it just buy something in e-commerce and you just come to my store and pay it. And boom, it started growing a lot. So yeah, so we need to be friends of cash for the moment, a little bit more years still now. What do you think, Javier?
I still hate cash, but but we have to, yeah. So it's adapting, Antonio, as you mentioned, and fantastic explanation. Here in Latin America, still cash is king. We suffer a lot, and the battle is being done country by country. In Panama is crazy. The cash, the checks. I also hate checks. I mean, it's like going back in time. I mean, so we suffer a lot, and it's funny how every country is evolving different. So we saw that in Argentina, and in Argentina there was a big boom with the FinTech revolution, and what Mercado Pago started doing, Walla started doing, Naranja X, a lot of.
Right.
2015, there were like no digital wallets, no neobanks in Argentina. Now are more than 50 from the regulator point of view working in the market. And the jump that we saw in the market is huge. So, I mean, my problem with cash is that if the cash is in the market, in everyone's wallet, in my house, in your house, it's not in the bank. And if it's not in the banks cannot add the value that they do, that they give that money to the entrepreneur, to the startup, to invest in those companies, to create value. So we don't have this virtual circle of improvement that markets need. So that's why I hate cash. I want cash to be in. But at the same time, I like people to have choices. So I
Right.
don't like imposing that to the market. I think we need to create the incentives, create the offering as entrepreneurs, as company builders. We need to create so much value in the proposal that we give to the market that the user himself is saying like, why I will still work with cash when I have all this advantage with digital solution. And we saw that a lot in Argentina. Right now, I will say that 50% of Argentinians pay by QR, and it's growing fantastic. And it went first to the bottom of the market. So the little shops, the mom and pops, the convenience stores. And you saw adapting that very fast with a lot of solutions, with more and more digital players providing service in different scales to different segments. And it became a natural force where everyone was in it and nobody wanted to be left behind. So what you see in Argentina, where cash is king, I mean, still has a very prominent importance in Argentina, but it's lowering, is less and less important each day. And it's fantastic the solutions you see, more and more solutions, because again, the market is so varied, is so huge that there is no silver bullet, no one should fits all the solutions. So I mean, and even keeping in segments, I mean, it's not the same. For instance, in Latin America, there is a lot of government paying by checks. So and we have to go back a little to the basics. If I'm an employee, and if all of us are employees and the company pays us in cash, in physical bills in our hand, the way we are going to use that money is totally different than if you're being paid in a bank account. It's totally different. If all of us, even with our knowledge, we are paid in physical bills, from that moment, you start spending different. You're giving cash to your wife, to your kid, you're making certain payments, and whatever is left, you go to the bank. But the way that the payment of salaries is being done is hugely important because it affects how the distribution goes from there. So the government, how the government pays salaries, pay providers with checks and stuff like that, it makes a huge wave in the market. So that's something that we need to consider when, and again, the other part is a lot of, as Antonio perfectly mentioned, a lot of users, we see that we have the users that have a bank account, the users that don't have a bank account, and then the underbank or the users that have a bank account, but they go to the ATM, they take 100% of the money and they spend it everywhere by themselves. We did a survey a few years back, and when you see Argentina, Argentina again is a very immigrant population. I will say 40% come from Spain origin, 40% from Italian origin, and then you have like a 20% mixture of English origin, German origin, or whatever else. So when you see a city in Argentina, a typical city in Argentina, I think it's kind of, maybe Antonio can correlate with, so you have the special square, and you have the national bank, you have the police, you have the school, and you have the government building. So and this is the center of the community, the center of the big cities. The bank offering is 5 blocks from that square. So all the branches of the banks typically are in that square 5 blocks away. And when you go like 20, 30 blocks away, then you see other sort of providers. The OXXO, what Antonio was talking about, the OXXO offering, well, different retailers offering a financial solution. And then when you go like above 50, the population doesn't have anything to work. So we used to joke that population, they make once a month a travel to the downtown area to the bank branch to take the money out, and they live in a place of the city where everything is being done by cash. So if I live in a neighborhood where everything is being paid and done by cash, I will prefer cash. So is both parts playing along. Cash is still king. In Panama, we say that Panama you have, and again, I'm Argentinian living and enjoying this fantastic country called Panama, where you have two flavors, the Panama Miami or the Panama Latin America. And when you see about the Panama Miami, you see the malls, you see the Ferrari shops, you see a lot of things. And when you see about Panama Latin America, you see the roads that are more Argentinian style, the poor part of the city and stuff like that. So you have the two flavors. When we talk about the financial system in Panama, again, you have the two flavors. You have Panama is like the Switzerland of Latin America. It's the financial system of Latin America. Panama, as a reference, has twice the number of banks than Argentina with 10% of the population. So Panama is kind of 5 million population country. Argentina is 45 million population country, but Panama has double the number of banks. Panama is the number one country with contactless payments. Panama is a small country, small population, but it's like the fifth, seventh financial system in Latin America in size. So you can say a lot of things fantastic about the financial system in Panama. When you see Panama from a financial point of view, you have the inclusion part, and you see that is more correlated to Latin America. And when we see that, we always summarize the financial system in 5 pillars: payments, savings, lending, investment, and insurance. And these are the 5 pillars of the financial system. And of course, every pillar is huge in all the things that we can talk about that pillar and all that implies. So we are simplifying the financial system in these 5 pillars. When you talk about each pillar, in payments, you don't have instant payments and interoperable payments in Panama. You do have that in Brazil. You do have that in Argentina. You don't have in Panama. You don't have QR payments in Panama. You do have with Antonio in Mexico or with Mercado Pago in Argentina, but you don't have in Panama. So when you talk about payments, you see that a lot is lacking in Panama, a lot of offering, a lot of solutions, a lot of tools for the user to improve his financial life are lacking from a payment point of view. If you go to savings, 50% of the Panamanian, from the World Bank point of view with global fintechs, 50% of Panamanian doesn't have a bank account. So again, when you go to savings, you see the opportunities, ocean blue opportunities, huge opportunities. When you go to lending, the penetration of credit cards in Panama is between 10–15%. We are still looking for the number, but again, huge opportunities. Buy now, pay later still is a name. It's not something happening in the market right now in Panama. Huge opportunities. If you go to investment, again, 90% of the market in Panama are not investing in the market. So you see opportunity and opportunities all above. And if you go to insurance, you will say that 80% of more of the population doesn't have an insurance. So again, there is a huge opportunities, and we see financial inclusion as a great opportunity to improve Panamanians and Latin American life.
Awesome.
Thank you, Jonathan.
Awesome, Javier. Now let's make a turn to Colombia. Juan Pablo, turning to Colombia, what's the current state of digital lending and how are fintechs innovating locally?
Thank you, Jonathan. Let me give you a fast snapshot about myself. I'm a
Yes, of
co-founder
course.
of Technovation and some other fintech related startups, and also co-founder of the Colombian Fintech Association. I've been involved in the lending ecosystem since 2007, and obviously from day zero in the FinTech arena. So right now we focus on business developing in the development in digital lending. Right now, we have had customers from Mexico, Guatemala, Honduras, Colombia, obviously, and Peru and Brazil. So from our standpoint, we can see a very clear horizontal ecosystem within all those countries, and we have plenty of insights. But here in Colombia, the ecosystem is a very dynamic ecosystem. Lending is the biggest vertical in the tech innovation in the fintech arena, though we have mapped almost 100 B2C lenders within Colombia. About 70% of them are included in the association, and there's going to be plenty of other non-digital lenders. That we have done a pretty detailed mapping of the ecosystem because of those 100 companies, and we have 12 different categories, meaning we have all the single payment loans, including salary advances and payday loans, and the all of the other ones that are open-ended, and some of them the like the biggest ones are salary loans or salary loans and revolving, and you name it. You can find anything in Colombia, so there is a market for it. And obviously, the main question is: are we taking on new market share? Are we pulling out from the banking, or are we getting into new opportunities? For example, the non and the unbanked market. Trying to connect what Javier and Antonio just mentioned, we see something that it's common along Latin America. It's from one positive side is the network effect. We need people to use all the digital the vehicles, we need wallets, we need setbacks, we need all the digital technology that we can provide to this unbanked market. But from the negative side, we've seen that there's like a behavior effect that is not so positive. For example, all the government assistance from the pandemic, they boost the online usage on all the people, but the effect at the end, it's gone, it's lost, because we fintechs, we people in the fintech, we try to offer, develop, create, co-create, design, whatever, all the different vehicles for the people to use and make the digital currency, or not I'm not talking about crypto, I mean the electronic money. We need obviously to deal within the digital ecosystem, but at the end, what people do is that we can send money, we can lend and disperse money into a digital wallet, whatever, and at the end, what are we losing? Obviously, all the digital effect, because people, they just go up and they just cash out the money and spend it buying fruit, produce, whatever, paying for a taxi. So that's good and bad. That from a lender perspective is good, because we need to take that into consideration. For example, when we design an onboarding process for the disbursement, and let's say 6 years ago, it was not common to disperse into some correspondent we call maybe a banking agent. yeah, any shop in the street could be a banking agent. So right now we've seen that a digital lender needs to take that into consideration, meaning culture. We can't, or it's very tough to try to change a mindset, a whole society mindset. So we use payments and we use offline, both disbursement and collection through these banking agents. So let me finish by saying that the lending ecosystem, at least the B2C, it's a big and very dynamic ecosystem in Colombia, though it's one of the toughest market to monetize due to we have a cap rate, so you just can't charge more than X amount of interest. Same as maybe Costa Rica, I don't know, Panama, and maybe some states through United States, North America, and we have lenders need to deal with a mad dog. We say mad dog because it's a regulator that's dealing with the data protection. So you need to be very aware of how do you deal, how do you manage, how you transfer out of country data and all that stuff. And so I will stop there. That's one like a broad insight of what we do in digital lending in Colombia.
Thank you. Thank you, Juan Pablo. I think that we're ready for the second round about integration and infrastructure. But before to jump there, I would like to ask those questions here on the chat. One of the questions are coming from Ivan from Banpay. The question is, what red flags have you often seen in fintechs that make other companies hesitant to collaborate?
Antonio, do you want to go or?
No. Go, Javier.
Ivan, Jonathan, I think this is a fantastic group. So maybe this interaction is very good. If Ivan can provide more context about the question, it will help from my side to try to provide a better answer, if that's okay.
Okay, perfect. Yeah, go ahead, Ivan. You can talk. Yeah.
Okay, thanks for that also, Javier, and all people here. So maybe my question is more related. I have seen sometimes fintech, they are not planning to target people to solve the problems they really have. Sometimes they just want to sell the product. So what kind of like red flags, I mean, like bad things you have been looking when you want to target people in a good matter? As I was saying, sometimes we need to maybe focus more in solving the issues or providing our service in a good matter, and not just sell their product. So just talk maybe a little bit about around that.
Okay, and thank you, Ivan, for the question. One of the things that I always discuss with friends and in the market is that if you want, the good thing about being in Latin America in 2025 is that from a friend point of view, Central America is 4 years behind Brazil and the leaders in Latin America. The leaders in Latin America are like 4 years behind Europe, and Europe is like 80 years behind Asia. So what I'm trying to say with this is that I'm from the interior of Argentina, from Córdoba, from a province in the middle of Argentina. So the good thing is that we know we can see the future. We have what we call in Argentina Monday news. We know in advance what is happening because the information we have right now is complete about everything that is happening worldwide. And keep in mind that PayPal is a grown-up, has more than 20 years in the market. M-Pesa in Kenya, again, more than 20 years in the market. Alipay in China, again, more than 20 years. So we really can see the future of a lot of things that we want to bring to the market, and the opportunities in Latin America are huge. And again, one thing is inventing, and another thing is making innovation. Innovation, from my point of view, is improving Panamanians' ways of life with something, a fantastic idea from somewhere else that you as a company builder, as an entrepreneur, implements locally. So I used to work in Falabella in the 90s. And Falabella, you can summarize saying that it's a fantastic Chilean retail store, and it's a copycat of Macy Bloomingdale's, improving Chilean life. And then the rest, and it's a huge retail, one of the more important retails in Latin America. And I used to work in PayU, a Colombian platform with Juan Pablo there in Colombia, and it's a fantastic example of a fantastic payment platform. But at the origins, if you go back in time, it's a copycat of PayPal. And I used to work in Despegar.com, a fantastic travel agency from Argentina, unicorn company, huge success. Again, a copycat of Travelocity, Expedia from the United States. So again, we in Latin America, from my point of view, is less inventing something, more innovating, improving, implementing locally fantastic ideas worldwide. And again, of course, you have to implement well, and you have to understand the terrain, understand the community needs, and see how you can create value. As a company builders, it's all about creating value. If we don't create value, if we don't provide incentives, why people will change the way they are doing things? I don't know, Antonio, Juan Pablo, if you want to compliment me on that.
I very quick, something, as you all saw, there was like this startup fintech bubble in 2020, 21. There was a lot of investments, a lot of unicorns, and I was one of those. I was part of that bubble, no? So we just wanted to say, hey, let's just get clients, let's grow. We don't care about profitability. Let's grow, and somebody's gonna buy our company, no? And then that bubble that exploded, no? So 2023, 2024, it says, I don't care about your growth. Show me about what money, what value you bring to the market, and not only just selling and growing and giving free things, because that's not a business. So right now, the fintechs need to add value. They're not only just growing. I think that a lot of big companies like Rappi, like Clip, like Kavak, that they were not profitable companies, and they were losing money every month. 2 years from now, 1 year from now, they're telling, hey, you need to make money. So now they need to focus on that. So right now, it's not only growing, it's add value, win money, be profitable, and then grow. And then grow. If you can grow both, wow, you're going to be a great success, no? But right now is focusing on really adding value, and not just, like you said, Esteban, just selling a product. I don't care if it's added value or not. I just sell, grow. I think that it's not anymore. I think that the VCs and the world is forcing us to be to create a real business and not only a startup.
Absolutely. So I hope, Ivan, that you get the answers from the speakers. Let's now jump into the second round about integration and infrastructure. To Antonio, what trends are you seeing in Mexico around unifying payments channel, cards, and cash? Why is integration now priority?
Yeah, because when like Javier was saying, like when PayPal was created more than 20 years ago, they were just only connecting digital payments, no? So you just connect your e-commerce payments, and that's it. And it works. But right now in Mexico and Latin America, there's more than cards. We said before, there's a lot of cash, vouchers. There's new platforms like buy now, pay later. There are a lot of standalone digital wallets that they have their own closed loop, and they need to make connections. So right now, the one single connection, not only for cards and for digital payments, but for everything, it's something that has a lot of demand right now. Because like I told you before, nearly between 10 and 50% of all the e-commerce payments come in cash. So if you process all cards, that's I love it. But you're letting out buy now, pay later, you're letting out cash, you're letting out a lot of other things. So what, and that's only in e-commerce. And if you go on the other side, like in physical merchants, they say, okay, I can accept cards and I can accept cash. But there's a lot of other things, a lot of credit wallets, buy now, pay laters that they want to buy also in physical stores and are not connected with Visa and MasterCard. So what we are seeing right now is that the players that offer more of all the payment methods are going to start growing a little bit more faster. And that doesn't mean that you have to do everything. You don't have to have the connection with all the convenience stores for cash. And with Visa and MasterCard, you don't necessarily have to do that. But if you arrange everybody and you are the single connection for the merchant, they rather like to pay a little bit more, but having all the settlement and liquidation in one stop than making a lot of settlements and letting out some payment methods. I think in a very general way, I think that's
Thank you. No, that was great. Yeah. Now let's jump to Juan Pablo. Juan Pablo, you have worked in markets like Guatemala and Peru. What lessons have you learned from building lending models across different Latin American countries?
Many, and actually there's one of our customers right here, Nettie. He's attending.
Oh, awesome.
He's from Guatemala, and lessons, they come from every side, every corner. But let me tell you that from a broad view, the lending, it's almost the same. You need an onboarding, you need to validate, you need to say yes or no, and you need to disperse money, and then you need to collect. It's the same all over the world. Now, there's a cultural component very important for lenders to take into consideration and into their business model, and that could come from either validating your ID or maybe due to bank account penetrations, cash usage. It's different. But if we see it from a technology standpoint, all the lenders are looking for the next big technology, chip technology, and easiest technology, low code or at least no code, for them to be self-proactive, meaning that they don't want to be dependent into a third party. For example, a technology company, they want to handle their own decisions in real time. So technology, it's given that to the lenders. For example, AI, obviously in customer service, collections, onboarding, and what we've seen the less, because it's very technical, is in the credit risk models. So there's been some advantages in how I analyze a customer or a merchant, whatever. So technology could be applied into anywhere, but the challenges will come mostly, I think, from regulation. For example, in Brazil, you need to have your own license. different than the Latin America. And the other one, it's a culture and maybe the category in where you are located. So it's different from a payday loan model, for example, into a vehicle financing, or even into a buy now, pay later, or pause financing.
Perfect. This is interesting. And I think that this is also related within the technology and risk, which is this question to Javier. Javier, RegTech is gaining traction. Can you share how RegTech is supporting compliance and building trust in Latin America's fintech ecosystem?
Thank you, Jonathan, for the question, and complementing what Juan Pablo was mentioning right now. I mean, we have seen improvement on the offering of RegTech companies in Latin America for the onboarding, for the know your customer, for taking image, validating the ownership of the document, and live authentication. So we have seen a lot of improvement. Then again, it depends market on market, because certain markets have government solution that simplifies that. And we see a lot, like companies like Quash, we see new ways of scoring methods, and that is very important for lending companies, because again, one of the challenge, if we say that Latin America has a lot of unbanked population, one of the challenges is how I lend that person, how I know, Javier, that he will pay me back. Lending is easy, collecting is the challenge. So how I know that I can trust Antonio and give money to Antonio and he will pay me back. And again, there is a lot of new fintechs like Findo, Quash, doing alternative scoring, complementing the typical credit bureaus like Experian that has a solution in the market. And then there is a lot of what Juan Pablo was mentioning before, the fintech associations are maturing and growing. We launched the Panama Fintech Association last year. And again, we are talking with the market to improve the information that we have of the population, because better information of the population is better scoring, better credit is lower interest is gains for the population. So you see this value added circle that is very important, and you see a lot of solutions in the market improving that way, more companies, more evolved market, and this is at the end of the day, RegTech solutions are the backbone of the financial system. So the quality that we are seeing with new players in the market are letting us having better fintech solutions for the market, and a regulator that is more relaxed about what the solutions of the fintech offering is being happening in the market. So it's a good thing what we have been seeing in the last 10 years in the market, from 2016, that the solutions were not at a very good level, and what we see now, like players like Jumio providing a lot of value with a lot of, and again, with the situation where AI is making more complexity about providing very good validations on the onboarding part and off-fact list and validation, but the players that we have in the market are doing a fantastic job from my point of view, and they have given us the tools to provide very good solution from neobanks, from digital wallets, and the sort. At the same time, we as association, we want more information in the market to have better ways to qualify the users, and from a lending point of view, have a better way to understand who is the best customer, and how we can do specific interest rates depending on the customer, and add more value to the market. So it's evolving thing, but it's a very good, from my point of view, what we have seen in the market.
Awesome. Thank you, Javier. So before to jump into another question in the here on the chat, I would like to ask Antonio, your company has launched new infrastructure for unified payments. How do you measure its impact on digital inclusion?
Thank you, Jonathan. A lot. What we're doing right now in the app, just a quick overview. We started as QR payments, like a universal QR payments platform, but right now we saw due to the necessity of making profit and being a company that earns money and not only grows, we saw the opportunity of going to cash in and cash out. No, so we have a lot of merchants connected for QR payments. We have a lot of wallets connected for paying with QR, but the QR wasn't exploding less. We thought it was going to explode. So we saw an opportunity of, instead offering them the link for QR payments, we offer them the link for making cash in and cash out. So we started at the finals of 2023, building a cash in and cash out network. Right now, we have nearly 27,000 merchants connected for cash in and cash out, and a lot of users connected. So what we created is this platform where users that already receive in Mexico, the regular payment transfer solution is called SPAY, the way that banks send money among them, and it's a great infrastructure. So in Mexico, you can use SPAY, but SPAY is only for digitized money. So where we are connecting is we are connecting our solution with your SPAY account. So if you already have a SPAY, you have a bank account where you can receive wire transfers. What we're connecting with fintechs and banks is that with that same number, you can go to a Walmart and receive cash payments. So what we call it is we are digitizing money. No, so there's a lot of money outside. Right now, we help them to digitize. One, it goes to the system. There's a lot of people that wants to take them out, so we let them take it out. We have cash out also, but we are the fintechs and all the companies that are connected to us are more focused on cash in than cash out. So what we're doing is, once they do cash in, then we can offer them a lot of things. Now you can use your credit in this store. You can make QR payments. You can do a lot of things. If you want money, okay, you can do a cash out also. Don't worry, because the problem is that if we don't offer cash out, people won't like to cash in. They like to cash in if they know that they can cash out. But if they cannot cash out, they say, I'm going to leave it in cash because I don't know when I'm going to need it again. So that's a little bit of the things that we're doing right now. So yeah, what we call it, we are digitizing cash. And a little bit about what Ahmed Musam asked before in the chat, that you need to have a regulated figure to do that. If you're a bank or a fintech and you want to do cash in, you need as DAP, as the company that provides a solution, needs to be regulated and supervised by central bank, so that the money is going is clean money. Is a user that with the fintech that is working with us knows his user, knows where the money comes from. And yeah, so the central bank made this they call administrador de comisionistas, that is called like a commission agent manager. I translated like that later on it was called corresponsalía. That means that if a bank wants to make cash in or cash out with the supermarket, they need to have a direct connection, the bank and Walmart. Suppose they need to do a regulated connection, and they need to do reports to the central bank and all that. Right now they added a middleman. That's what DAP does. Instead of the fintech need to connect directly with the merchant, they need to connect with this commission manager. That's DAP. So what we do, we certify the fintech that the fintech does everything the way they used to supposed to do it to receive cash, and we also certify the merchant so that they do the things that the fintech needs to do that, and that the merchant complies all what the central bank demands them to comply, like simple things like the ticket. Once you make the cash in, the ticket of the supermarket cannot say, hey, this is a DAP payment. No, it needs to say, this is a bank Albo payment. This is a Banco Azteca deposit. They need to have the name of the bank that is making the deposit, but they don't have to need this direct connection. So that's helping that merchants that they don't have the figure of corresponsal, they can connect with a company like that and they can offer that solution. And in the same way, the fintechs, they just connect with us, and we have new stores. They don't have to do nothing. They just, if right now I have 10,000 stores, but tomorrow I have another 3,000, they don't have to do nothing. They just have them. And if we have 10,000 more, they don't have to do nothing. They just have a bigger network. So yeah, with this effort of the government and with the fintechs, with the lending companies, and with companies like DAP, we're pretty sure that digitizing cash is going to be much easier, and we're going to bring the total digitalization sooner than we expected.
Thank you, Antonio. Ahmed is asking here on the chat. It says, DAP operates like an EMI or PSP? Apologize, but I'm a little confused. Or is it like a bank agnostic?
No, yeah, we are more like a PSP, but it's different. In Mexico, like the regular PSP, maybe in Latin America and other countries, like the payments, like regularly they do cards payments. So we are right now doing also cards due to a new strategy, because to connect it, everything, cards, cash, wire transfers, buy now, pay later, we are connecting everything in one. But DAP is not, we don't need to be a certified PSP in Mexico. We need to be a commission manager. Yeah. We need to be, if we receive funds, we for cards, we need to be an aggregator. Like that would be similar like a PSP, I think so. But yeah, there's like different licenses depending on the product you want to do. So yeah, we are right now DAP. We are aggregators, so we can do car payments. We are Cody enablers, so that we can enable Cody like Pix in Brazil, but in Mexico we also do Cody enabler. We are a commission manager, so we can manage cash. And yeah, those 3 licenses are the ones that we have. There are more. If we want to do like remittances and all that stuff, we need to be an MSB. But right now we're focused on in Mexico.
And I will say that this, Antonio, of course, depends market by market. So you have different regulations in each market. Of course, Mexico is one of the biggest markets. So again, it's very fantastic what Antonio is doing with DAP in Mexico.
Perfect. Thanks. Perfect. We are about to, we are in the last stage of the event. I would like to ask 1 or 2 more questions. One of the questions is to Juan Pablo. So Juan Pablo, with lending expansion, how do you ensure that digital lending doesn't just grow fast, but grows responsibly?
That's part of our philosophy as consultants. Obviously, I can tell you that maybe it's a 3-legged table. One, it's about keeping a robust credit risk process, meaning that we need to evaluate thoroughly any requests. Those closely track your portfolio, and while helping customers understand what they are getting into, what type of responsibility, what type of financial costs they are committing. So in that way, we can tell our customers, and we work with our customers, that you will be able to grow, stay healthy, and look for a long term. It could change depending on the maturity of the company. If you are on a early stage company lender, it's different than a mid or a mature company.
Awesome. Awesome. So before responding to other question here in the chat, I would like to ask this as a final rapid round. Big best for Latin America. So to all the speakers, what's the next big challenge or opportunity you are bidding on in Latin America's fintech space? If each of you can add something to that question, that would be great for the audience.
Okay.
Dale, Antonio.
No, a ver, no, wait. Could you? I didn't know if I was in mute. Could you repeat again, please, Jonathan, just quickly?
Yeah. What's the next big challenge or opportunity you are bidding on in Latin America's fintech space?
Híjole. I think there's a lot of challenges that we have on front. Honestly, the main that I see for all the fintechs is reaching profitability. I don't think the main fintechs, I cannot say, and I have no hard data, but very few companies are profitability. They're all looking at it. They're looking forward to achieving it. But I think that in the middle, like from right now, in the next 2 years, we're gonna see the companies that grow very big and are gonna do it very great, and we're gonna see companies that are gonna start closing doors and sooner, because when we were racing a Series B round like 1.5 years ago, and what we started seeing and what we heard a lot is that there was no investment. There was no investment. People not giving investment. There was no money, and there were a lot of companies that are living without money. They don't have money anymore. So hey, I need investment, but VCs, they don't want to give the money on the valuations that they were used to the companies that are not profitable. So what it was happening, there was a lot of venture debt. So there's starting a lot of debt, and a lot of companies grab this debt, but I don't know if they're going to be able to pay that debt in the next 2-3 years. So I think that's a great challenge for everybody. I'm speaking for Mexico, a lot of fintechs and a lot of startups that they need to go to profitability. And one thing that I think that what we are doing, like I remember, like, I don't know, like 4 years ago, we just received a lot of money, a lot of VCs participating in that. And one of the things that we love is that we were 10 people, now we're 30, now we're 60 people, now we're 70 people. Everybody was showing up about the big people you are and what are you doing. And my experience right now is, I would love to say that we're only 3 people and that we're doing all what we can do with only 3 people. That would be a very, very profitable company, and a very company that knows how to do things and not just like spending. So right now, I still see companies that have a lot of people, and I question if they're gonna get profitability with so many people. So
Totally.
I don't know.
Agree.
I think that's a big challenge right now. I think that's a big challenge in Mexico.
Yeah. What would you like to add, Javier?
Well, let me say this. I see instant payments like a fantastic opportunity, and it has to be like a wave that cross all the countries. What we have seen in PIX in Brazil is kind of a miracle. What is happening with Transferencia 3.0 in Argentina, and we see other markets, but it's not a reality in all the markets in Latin America. So it's going to be something that each country is going to be under pressure to have instant and interoperable payments for the community, and it's happening here in Panama. This is a big discussion in Panama. If they give you a transfer on Friday, you have to wait to Monday to get the money. So these kind of things is not acceptable in 2025. So I see that the discussion is going to be higher in level, going to the president of each country, saying why my country doesn't have what the neighbor country has, and I cannot move my money. I cannot move it anywhere. So the instant payments, interoperable payments is going to be a fantastic topic. I mean, we have seen buy now, pay later power and contribution to the market, and I think it's fantastic to have that as option and offering. There are some countries doing fantastic, but there are a lot of countries in Latin America that it's only a title in the newspaper. It's nothing happening yet. I see that that's going to be a huge opportunity. And then at the same time, and going back to what Antonio and his team are doing, there is a phrase going around that I enjoy, that financial system is so important for society that you cannot leave it to the banks. And what I take from that phrase is that there is a lot of the financial system solutions that are coming from outside bank entities. And this is Uber with Uber Pay, this is Amazon with Amazon Pay, this is Google with Google Pay. So there is a lot of things happening outside banks, and we need to see that in the market. We are if you go to Chile, the more important financial players are the retailers, even bigger than the banks, with Falabella, Ripley, La Polar, and in Mexico is happening a lot with even also what they are doing with their wallet, but you don't see that in the rest of Latin America, and I think that's something that's going to happen. And then the other thing is it's going to be a pressure to start to every country to provide financial inclusion metrics, to financial inclusion KPIs. So right now, in most of the countries in Latin America, we don't know how they're doing with financial inclusion metrics. We have the World Bank with the global FinTech data, but this is happening every 3 years or more. And so we have that data, but we need every year data about how financial inclusion is improving in every country. And I think it's going to be a lot of pressure to start having the countries say how they are doing in giving better financial tools, better financial inclusion for the societies. Thank you, Jonathan.
Thank you. Thank you, Javier. Juan, you would like to add something there?
Yes. Very briefly, from our customers' standpoint, I guess if anyone, any attendee here is from the lending ecosystem, I could say that we need mass adoption beyond top segments. Everything related with subprime, obviously. And where we see a big opportunities, or where we can see our real lines of opportunity, it's creating risk models in the middle and low income markets. Because one of the challenges we've seen along the Central America and northern part of South America is how to validate income. No, sometimes scarcity of information makes you think twice. How do I fit my risk model? So that's where we see the opportunities, and there's where we are focusing on. And adding what just Javier said, retailers are the ones that we see as an opportunity. Those are the ones that they have the affinity with customers, they know their customers, they know transactions, they know expenditures, they know a lot about the customers. So we've seen a trend from these players becoming fintechs from being retailers. Thank you, Jonathan.
Thank you, Juan Pablo. Okay, I think that we have covered what we needed to cover during this event. I hope the audience got everything to understand a little bit better what is currently happening in Latin America. So I think This was a great overview of the challenge, opportunities, risk, technology, everything related to what is happening in Latin America right now. I think if you would like to answer this last question from Marcia, she said, you talked about monetization. What value added services do you experiment with to drive up margins?
I don't know who directly is she asking for.
I can give you
It
some.
will apply to any of us.
Go, Juan Pablo. Go,
That's
please.
fine. Okay, Marcia, from a lending standpoint, depends on the country where you are located at. But for example, in Colombia, and where you have interest rate caps, we've seen many lenders, and if you're a single payment or regardless of the category, think about being a multi-product or moving towards a multi-product lender instead of being just a niche product.
So
Perfect.
I will say, Marcia, that all that is lending, it gives you a very good margin. All that is insurance is also giving, in general terms, neobanks and fintechs provide with the payment a more inclusive rail, but with less margin. So as Antonio was mentioning, payments by itself is very hard to go to break even. On the transaction side, you are on good territory. So that's why Antonio is a very good example of a company looking for going to a monetized way of making a better improvement in cash flow and being more monetarily safe. So I will say that in financial system, lending is the vertical to, if you are looking to improve your margins, lending is always a very vertical to consider, then insurance, and then you can see investment and other opportunities,
Yes.
again, more in the transaction side.
Javier, and
Absolutely.
you just mentioned very important thing. Many payment gateways, they do know transactions, they do know people, they do know their customers, they do know where their stores are, and we've seen some trends becoming lenders as well. Thank you, Javier, for that.
Fantastic, fantastic. So thank you again, everybody, for attending this event. Hopefully, maybe we can arrange a second round, maybe in the future. There is a lot to cover, I'm sure about that. So 1 hour and a half is not enough to cover everything. But unless we were able to provide a huge overview of what is currently happening in Latin America. So thank you, Antonio. Thank you, Javier. Thank you, Juan Pablo, for attending this event and for your participation and all the information that you provided to the audience. Thank you so much for that.
Thank you all.
Thank you, everybody.
Have a good day.
Thank you, guys. Enjoy.
Bye-bye.
Thank you.